Hi friends, many of you who have been following me on Instagram commented if I could make a video on the new tax-free home saving account, which I will refer hereafter in abbreviation as FHSA. So this week federal government has introduced this draft legislation on FHSA, which is expected to be launched sometimes in 2023. In today's video, I will cover following, which you can see on the screen. And also you can find the timestamp so that you have easy navigation to a particular question you have in mind. In case you're new to my channel, don't forget to subscribe, like and share, because sharing is caring. So the question starts with, what is FHSA? This new registered plan will give prospective first-time home buyer ability to save 40,000 Canadian dollar on a tax-free basis towards purchase of their home in Canada. When we bought our first home, we used RRSP. So this home saving account will be tax deductible like RRSP, but withdrawable to purchase a first home, including from any investment income or growth earned in this account, which would be non-taxable just like TFSA. So how to open this FHSA? Few basic requirements to open are: an individual must be resident of Canada, above 18 years of age, and must be first time home buyer. To elaborate, must not be owning a principal residence in which you have lived at any time during the part of calendar year before this account is opened, or at any time in the preceding 4 calendar years. Now coming to question on how long FHSA can remain open. Well, it can remain open up to 15 years or until the end of year when you turn 71-year-old. Any FHSA savings which has not been used to buy a qualifying home by this time can be transferred to RRSP or RRIF on tax-free basis without paying any taxes, or you can also withdraw this amount on taxable basis if you are not doing the transfer. Hope this is clear. Now coming to how much can you contribute. Lifetime contribution is up to Canadian dollar 40,000, and there is also an annual cap of 8,000. Say I open this account and I'm eligible, I contribute 8,000 for next 5 years. On 6th year, I cannot contribute anymore as I have reached the cap. Now say I am not contributing 8,000 a year and I contribute 5,000 per year, and I do this every year. So I can contribute for 8 years. Now there is also a penalty of 1% per month for any over contribution, just like the RRSP and TFSA. You must be knowing the flexibility of contribution one can make in RRSP. That is, the contribution can be made within first 60 days of subsequent year and make tax deduction for the current tax year. In FHSA, the annual contribution limit will apply to those made within a particular calendar year. If you have any unused FHSA contribution as per the draft legislation, you can carry forward unused portion of annual contribution limit up to maximum of 8,000. What does this mean? This means that if you contributed less than 8,000 in a given year, you can then contribute any unused amount in the future year, in addition to your annual contribution limit of 8,000 with a lifetime cap of 40,000 Canadian dollar. Let me further explain. Say you had a room of 8,000 in 2023. This is just an example, okay? But only contributed 5,000 to this amount. Now the balanced 3,000 unused amount in 2023 can be carried forward to 2024, where you would get another 8,000 additional room. So 8,000 plus 3,000 becomes a accumulated 11,000 for you. I hope this also gives you some insight. Can I have FHSA with multiple financial institutions? The answer is yes. Just make sure that the total does not exceed annual or lifetime contribution limit. Which all investment can be held in FHSA? Just like RRSP and TFSA, holder is permitted to hold qualified investment like mutual funds, securities which are traded publicly, government and corporate bonds, and guaranteed income certificate. Just like RRSP contribution, you will not be required to claim the deduction in tax year in which contribution is made. The amount can be carried forward indefinitely and deducted in later tax year, which makes sense if you are in higher tax bracket in future year. How can I withdraw? To withdraw this fund without tax implication, that is non-taxable basis, certain condition must be met. What are they? You must be first time home buyer at the time of withdrawal. You must have a written agreement to build or buy a qualifying home before October 1st of the year following the year of withdrawal. You must have intent to occupy this home as your principal residence, and this has to be in Canada. If these criteria are being met, then the entire balance in FHSA can be withdrawn on tax-free basis in single or series of withdrawal. This FHSA must be closed by end of the year following the first qualifying withdrawal, and you are not permitted to have another FHSA in your lifetime. So no more you are a first time home buyer. Coming to moving funds between registered account, if you are transferring fund from one FHSA to another or RRSP or RRIF, all this transfer will be tax free basis. Now if you have transferred to RRSP or RRIF, whenever you do ultimate withdrawal, you will be taxed. When any such transfer gets initiated, you won't have effect on RRSP room. If you know about RRSP, there was a provision that the spouse can contribute to RRSP and claim the tax deduction. In case of FHSA, the holder can claim deduction to the contribution made. Now coming to what happens in case of death. FHSA successor, whoever is designated, for example, spouse or common law partner. The surviving partner will be the new holder following death of original holder. Also, this won't affect the surviving spouse contribution limit. If beneficiary is not spouse or partner, then the fund will have to be withdrawn and paid to beneficiary, and this will be taxable to them. FHSA does not have creditor protection under the Bankruptcy and Insolvency Act. Now coming to question, can I withdraw from RRSP and FSHA for the home buyers plan? The answer is option to withdraw up to 35,000 will continue to be available in RRSP, but you cannot take both FHSA and RRSP withdrawal for the same home purchase. Hope you found some insight. Please don't forget to like, share, and if not subscribed, please subscribe to Canada Tried and Tested. Thank you.